All right, welcome back into Market Day Report. I am Scott Shaw, otherwise known as the Cow Guy. Thank you very much for tuning us in. If you're just doing that, if you've been with us all day, I thank you for staying with us. All right, let's take a look at corn. That'd be a great one to start on. 2 cents higher. We're pretty much 2 cents higher across the board. 681 and a quarter is last in Dees. That's close to the high. It's right in the middle of the day's range, right? 2 cents higher in March. 686 and 3/4 is last there. So a quiet board, just quietly better. We'd call that steady, a little bit better if we were on the floor. Soybeans, this is a good one. 25.5 cents higher in that NOV contract. 14.52 and a quarter is last. And ladies and gentlemen, that's a new high in NOV. Jan is 24.5 cents higher. 14.61 and a half. It's about 4 cents off the highs in Jan. That's a strong board, though. How about the wheat in Chicago? Chicago wheat, what's going on there? 6 3/4 cents higher in the Dees to 8.47 and a quarter. Well, March is up 7 cents to 8.66 and 3/4. So a decent wheat board in Chicago. How about the wheat in Kansas City? That's the hard red wheat down there. 11 cents higher there, 9.52 and a quarter, 6 cents off the highs. So that's still pretty strong. 11 3/4 cents higher in the March, right behind the Dees. 9.50 and a half is last in the March. Spring wheat in Minneapolis. 14 3/4 cents higher, good strong board. Dees is up to 9.57 and 3/4. March is up 16 cents to 9.71 even. All right, how about cotton? This one's on a rocket shop again today. 437 points higher, 87.37, 50 points off the highs. That gives us a chance to get back to our next guest analyst, and that's Todd Horowitz. He's with Bubba Trading. And right now he's in Las Vegas. Todd, we joke, but with Putin and President Xi moving these markets on a daily basis, it's kind of hard to wrap your head around it. I mean, one day we're on, one day we're off. Who knows? Maybe they locked down a big province on Sunday and it's all changed, right?
Well, yeah, I think there is. Listen, I do believe there's maybe a little funny business going on in the commodities for the election. I mean, look at the stock market, up huge today. We're down now. It was up, it was down, it was up. But I think the real key here is crude oil. Suddenly out of nowhere, crude has rallied from, like 80 to 92, 93 now and headed higher. Look at cotton. Cotton's come up from 75 to 87. And the grains have kind of stuck in this range, but now all of a sudden we're getting a little bit of a rally in grains too. And I think that the commodity space in general is going to be very bullish going forward. I think that, the suppression, in my opinion, of what we're seeing was more for Tuesday, which is coming up. And I don't think it's working. And I think you're starting to see some of the people that are holding it down, some of the shorts are starting to cover. And I think this could create a much bigger rally than anybody imagines.
Are you confused by any mixed signals out there? I mean, look, we've got the dollar markedly lower here today, but the 10-year yield really hasn't come off. Actually, it's kind of higher. That's a little.
I think you have a reaction to the jobs number, which, again, the jobs number is, as you and I both know, is so artificial because it's always revised the following month. So we really don't know what true numbers are. But 260, we're only really replacing still jobs that are from COVID. We're still, I think, if you look at the U6, which is the 6-month unemployment, we still have a lot of trouble in the economy. So I see a lot of confusion, but one thing that doesn't confuse me is there's going to be a shortage of food. And especially with this diesel fuel that looks like is true, and we are going to be short and out of fuel, we're not getting delivery, those prices are going to skyrocket. And that's, I think, what I see.
And if that's the case, that's not going to be good for inflation, right? I mean, this crude oil price isn't good for inflation.
There's nothing that's good for inflation right now, Scott. They have done nothing to help inflation. The Federal Reserve raising rates into a recession is a joke. Again, there's one way to do it. And of course, that would mean that they'd have to make a deal with the oil companies. The oil companies are not going to go back to pumping and drilling unless they can get guaranteed a longer term contract, not just a couple of months to get us off the bouncer. And from a climate standpoint, the carbon footprint does not change one iota if we go back to drilling. In fact, it probably gets better because you see continuation of coal mines being opened, and we're now burning a record amount of coal around the world.
All right, we're going to have to end on that one. We'll at least take a break. We're going to go away. We're going to digest what Todd had to say. We're going to pay some bills. We're going to come back and talk more with Bubba, Todd Horowitz, after this. All right, welcome back to Market Day Report. Let's take a look at these cattle and hog prices. I like the cattle prices. That's a good segue from the Cow Guy into cattle. Dees down 30 cents to 151.65. That's just a dime off the lows in a quiet market, folks. February is down 40 cents to 154.47. There you go. Let's not linger on it too long. There's not a lot happening. There's the prices that you waited for. How about some feeder cattle prices? They're up a little bit here today, but still very, very quiet. 17 cents higher in Nove. 178.17 is last. That's in the middle of the day's range. Jan's up 55 cents. Double nickels, we call that on the floor. 179.97 is last there, kind of in the middle of the range as well. Finally, let's finish up with lean hogs. We'll get back to Todd Horowitz from Bubba Trading. Let's see. Let's go with these is down 15 cents to 83.22. Feb's down 20 cents to 86.97. These prices are brought to us by Bar Chart. Get that out there. Todd, let's come back on and tell us what you think about all these livestock prices.
I think they're in good shape, Scott. I think that, again, we'll go back to, the action in crude will affect cattle and it'll dribble down the hogs. But I think if you take them as a trio, I think they're all strong. I think they're all going to be solid. I don't see a dramatic move to the upside. I mean, listen, fat cattle's at $1.51 or $1.52. That's pretty high, compared to, historical rates, other than when we had the big diseases 4 or 5 years ago. But I think that they're going to continue to stay strong, and I don't think there's a lot of room on the downside. I just think we're more range bound to higher, and we could see, again, if we start to see some shortages there, we could see some much higher prices there as well. But right now, I think we're probably going to be pretty much range bound to the upper end of the range.
Could more interest rate hikes hurt that real quick here? I mean, that
100%. Listen, the more you take away from people's pocket, the less they have to buy food, and they're going to have to stretch that budget. And that's a very big problem. And I don't see the Fed stopping hiking rates either, which is another problem because, of course, it hurts every market, the housing market, the food market, and farmers, especially because of what they pay to borrow to put that stuff in the ground and to take care of their cattle and hogs.
Not good. I agree with you. All right. Appreciate you coming on. Have a great weekend out in Las Vegas. That's Todd Horowitz, Bubba Trading. He's in Las Vegas. We're in Nash Vegas, so I can throw this back over to Suzanne.